Accounting cycle, transactions, source documents, subsidiary journals, general ledger, trial balance, and financial statements. Out of that cycle, which topics did we encounter? We know transactions. We know source documents. Now we are on. Can you see now? So we are trying to solve that cycle. Now we are going to start with what? The subsidiary journals. Are we together? Yes. Remember I said before, when it comes to transactions, just to recap a bit, you know that transactions do not behave the same. I think you realize that by the time when you were dealing with account equation, transactions are not the same. Sometimes we sell, sometimes we buy. But when we sell, we can either sell in two ways. Either cash or the same applies to when you buy, you either buy or cash or credit. So now it's time for us to say, when we sell and we receive cash, we need to have one book only for that cash which we receive. Does that make sense? When we pay cash, we need to have a book for the cash paid. When we sell goods on credit, we need to have a book for what? For only those transactions. So those books are called subsidiary journals. Are you okay? Meaning cash received aside, cash payment aside, sales on credit aside, purchases on credit aside. So we're going to try and separate them and group them according to the nature. So these sometimes are called books of first entry. Okay? And then sometimes you can call them books of what? Prime entry. Are we together? So it means we are gonna record what? The transactions in the what? In the books of first entry. But I'm gonna go through them one by one so that when we start recording, everything makes sense. Okay? So I'm gonna deal with them not in a particular order. So I'm just gonna put them on the board and we discuss. So if you struggle, you tell me. I'm gonna start with the first one that you like. When we receive cash, which book do we normally record? Remember, some of you have never heard about this. Just try. I know from metric you call it CRJ. You can still call it, but I'm going to call it according to our book. We call it what? Cash book. Receipts. Guys, cash book receipts is the same as cash receipts journal. Don't be confused. It's just that here we call it what? Cash book receipts. And you must know how to abbreviate that. Give it to me. How do we normally call it in short? CBR. Are we together? I want you to learn these things. Because they can ask you to give them the book and again the abbreviation for that. You need to master that abbreviation. Remember those who did accounting, old accounting like me, meaning you and I in the same WhatsApp group, okay? You used to call it what? CRJ. Don't be confused. That's the one and the same thing. Remember, we need to understand this. Firstly, we need, I know I gave you some notes, but we need to talk about what do we normally record. In a nutshell, here we record all inflows of, meaning the cash receipt. Can you see? We're receiving. So, meaning when you read a transaction, check if you are receiving what? Cash. The minute you receive cash. It doesn't matter whether you receive it from Sylvester or any. As long as the cash is being received, you must put it under what? CDR. So you must understand the transaction. Are we together? In a nutshell. At the same time, we need to know the source documents. Remember, normally when you receive cash, you must issue some source documents. Please give me any source document that you know that we can use when we receive cash.
A receipt?
A receipt. Can you see that? So let me call it cash receipt or a receipt. Are we together? So when you pay an account, or let's say if I receive money from you, let's say you are my debtor, I must give you what? A receipt. But you need to be careful here. Remember, if I receive a receipt, it means someone gave it to me. So we have got the supply of the receipt and the receipt of the receipt. For example, when the debtors pay me, I give them what? But I give them original receipt. But what do I remain with in the business? Duplicate. So again here at the same time, I want you to know that in the books of accounts, we will retain what? Duplicate. Because sometimes they can challenge you and give you the source document. By seeing the source document, you must know whether you received it or you issued it. Because here I'm the one, the business is issuing the receipt, we retain what? Duplicate. We give what? We don't care about what we gave. The person to whom we gave that particular source document will deal with it. But we only care about, after issuing the source document, what are we having in the books of accounts? So we are left with what? Duplicate. But in a nutshell, we have got what? Cash receipts. Especially when the debtors pay us. Please give me any other source document that you can remember. When you go to the canteen during the break, when you buy, they give you something?
That roll.
Yes, what do we call it? In short, if they don't give you that, you say, I want my slip. So we have what we call cash slip. And that cash slip is always original because it's part of that roll. You remember I said roll? Sometimes we call it cash register roll. You can even write cash register roll for me. I don't mind. Okay? This one obviously is going to always be what? Original, because it's part of the original. You know, at the canteen when they, after selling to you, they give you that source document. And the other piece they go, I saw them, I was checking them one day. The other piece they go and put it on something sharper like this. Yeah. Hey, that is very dangerous. Just imagine that thing. If you can make a mistake and you are trying to, and your finger, it's too sharp like that. Okay? So it means they retain that for their own records. Because at the end, they're a business, they need to record in the books of accounts. Okay? Sometimes we can issue what we call, it depends, cash invoice. Yes, we can issue cash invoice when we receive. Okay? And again, when it comes to the cash invoice, it's all about, okay, are we receiving? Obviously, we are the ones who are receiving. So we give what? Original. We are retained with duplicate. So I'm just trying to give you an overview. But most things will be learned by the time when we record in the books. For now, I'm giving you the theory because the theory is tested and you cannot record if you don't know the theory. Are we together? So far, do you have any questions? Now, remember I'm just giving the theory today around that, so I want it to make sense. Remember, they are going to test you on this and they're going to say VAT is included or VAT is excluded. Meaning you are going to be a VAT vendor. Meaning if you are a VAT vendor, when you sell other items, you will have to charge what? VAT. Normally here you will see when we make sales. Remember that transition that gives you problems? Sales of goods. Hey, you saw flames in the test. I don't know why. What happened? A night before, some of you were confused. The 6A and 6B, ah, you mixed. It's okay, it's part of life. But at the end of the day, you must know that we are going to sell stock here. When you sell stock, what VAT do we normally charge to the customers? What VAT? Output VAT. You will see by the time when we deal with this, remember I'm just trying to give you the theory, we are going to deal with what? If you are VAT vendors. Because here for us to receive cash, it means we'll be selling or offering a service to someone else. So if I offer you a service, I charge you what? Output VAT. Just for interest's sake, what is output VAT to us? Classifications, groups. How many groups of accounts do you have? I don't have to ask you. Okay. It's an income. Do you agree? That day was explaining here. The diagram was here. I think it was on the 16th. I think it was around 8:40. Yes, remember that time? It was a little bit hot when I was explaining. I remember that day. And you told me that you understood this. It was input and I said the other one was payable, the other one was claimable.
Input VAT is claimable, output VAT is payable.
Okay, payable must give you the
So does
classification.
that mean it's an expense?
Payable, still to be paid. You owe it.
Liability.
Do you know detention? Can you see now? We forget. And it's going to challenge us. It will always be what? A liability. So, don't worry. You still have to recap. It's okay. But please, any question about this one?
So why is output VAT under the cash book?
Because by the time when we sell, we receive cash from the customers. Remember, you charge customers VAT. Because they're the ones who are giving you cash, you charge them VAT. So that VAT is called what? Write it down. VAT charged to the customers is classified as what? Output VAT. Are we together? But sometimes we go and buy. When we buy as a business, they charge us VAT. What is that VAT called? Input VAT. Remember, you need to be a VAT vendor before you can go and claim input VAT. Okay? And again, I told you that the advantage of registering for VAT, again, is for you to claim what? Input VAT. Even though sometimes they do allow you to claim input VAT, even though you did not pay it. We call it a notional input VAT, but don't worry about that for now. But just know that I charge customers, the customers pay me what? Output. And when I go and buy from my suppliers, they charge me what? Input. I want you to get that. Are we okay so far? So remember, these are the cash books. Cash books, you will see. Number 2. You look tired. I don't know what happened. What happened, guys? Is that because they said there was an accident somewhere? Is that one? Sorry. It's okay. You'll be okay, eh? Cash book payments, obviously, is the complete opposite of what? Cash book receipts. What is the abbreviation? CB, formerly known as CPJ. Yes, we need to know these things. Okay. Guys, I just said it's the complete opposite of that. Let's check. What can I write as the first point if you are trying to do the opposite?
Outflow.
Outflow of cash, meaning when we pay cash out. Can you see now? Which such documents do you think we can issue in this case? Just try. Like when we pay, there must be proof of payment. So give me any such document that you think we can use. Normally, how do we pay? Check. But we don't say check. What is that proof of check? Yes, I agree. You said check, no? but we cannot just say, remember when you are issuing a check, I know you don't use checks anymore because of technology. A check, let me draw a check, guys. Don't laugh at me, I'm just trying. A check looks like this in a checkbook. And then it has got, thank you very much. So meaning you will give this part to the payee and this part is left in the business. This part is called what? Check. Please, you must know this. Can you see? It's going to be check, counterfoil. So that is what we are remained with. Remember, the check was this. So this part is given to the payee and this part is left. So do you think, what is this part? Is it duplicate or original? Because it's still part of what? The check. So this will always be what? Original. It can't be duplicate because check we don't have duplicates. Because it's still part of the check, just that piece, part of it has been left to the business, okay? So we need to know that. Okay. Again here, guys, we can also be issued what? Yes, we can still use cash invoices, but at the same time, it must be what? Unlike that one. Can you see now? Yes. Please, man, tell me about any other thing. What else do you think we can think about it? We have been paying all your life, man. I think almost 15 years we have been paying. But what can you have as a proof after paying? Try. Oh, guys, we use technology these days. What if you don't want to pay using check? You don't have checks, I can see now. What do you normally pay apart from cash? You can't fit 1 million in the pocket. You can't fit. So what do you normally use? EFT. Thank you. What is EFT in full? Electronic? Yeah, I remember there was a question like this in the test. People gave me things, eh? Okay, but they all got electronic.
Financial transactions.
And not financial. I know I've seen that before, financial, but it's not.
Fundamental transactions.
No, I like that. I like the creativity there. Please try EFT. Can you see talk about these things? I have an EFT. They say, please tell us. What is it? Okay, what is the last, the T? Huh? Transaction. No. You are very creative today, but you are not. Transfer. You're correct. Let's find F in the middle.
Electronic funds.
Funds transfer. Write it down. Hey, they can ask you, what does it stand for? Electronic funds transfer. Yes, you can use that as a proof. You can use it. And what else, guys? Here you can find some. Sometimes, if they're trying to trace funds, let's say you paid 1 million, and they can't, let's say you don't have EFT, but they can go and trace that 1 million somewhere. Where can they find that 1 million that you paid? Bank statement. Thank you. Even a bank statement is a source document. This is just a proof of payment, guys. Yes.
Can you use the bank statement for the CRG as well?
Yes, but normally we use it here, but you can still use it there. Yes, for the yeah, even the bank statement here. Yeah, but in most cases we can use it here. So in both cases, as long as we want to prove that particular one. Even the bank statement here, guys, can be used. So I'm just trying to give you more, you know that. But yeah, I think for now, these source documents are enough. Okay. When we buy or when we pay, remember here it's all about cash out. We can either buy things cash, let's say trading stock cash. Remember, if we're a VAT vendor, there must be VAT. So what is the VAT?
Input.
Input VAT. Because we're the ones who are buying, they charge us. So I'm going to have input VAT. So how can we classify that input VAT? According to what I said there.
It's an asset.
It is an asset. Which asset? Be specific. Impress me.
Current asset.
Current assets. Which liability here?
Current liabilities.
Thank you very much. I know you learned this thing, but I just wanna, because they can ask you this. You're still gonna open these accounts. I want you to understand them better. By the way, where do they increase?
Credit side for after back and debit side.
You're on fire. Guys, that's why we have to learn from chapter 1. Because it's the building block to this. So if you don't remember this, you're going to struggle. That account equation, do not forget it. It's going to affect everything now. Guys, this is what we call the cash transactions. Okay? I can call this, let me just write there. These are cash transactions so far. Okay? So, for now, you need to know the difference. These are the main ones. I'm still going to show you another cash book. Not a cash book, but it's a cash transaction book. So, I'm going to show you that one. So, but for now, I want you to know the difference between the two. Please ask me any question on this if you are lost. Because I need to show you the other one. Can I move on? Guys, you can take a picture because you cannot write this, you're going to waste time. Take a picture of this because I want to go to number 3, still under the cash transactions. Because I'm going to remove this now. Good? I'm going to remove, because of space, I'm going to remove this. I'm going to go to number 3. Still under what? Cash transactions. Now, we've got the third one, because of space, is the continuation of what I had here. You know, sometimes it's not necessary for you to use EFT or use a bank statement to pay, you know? Yes? Yes. Okay. So it's not advisable for you to do that. As she said what? Petty cash. What is petty cash? Current assets, I agree. So what kind of items do we buy with petty cash?
Little items. Isn't it like change?
That is cash flow. Change is cash flow. What can you say about the petty cash?
Like it's cash on hand. It's not in the till, but it's cash on hand. That no, you use petty cash vouchers. No, that's the source.
Yes, so statements already. But what do we use it for? Okay, think about a man of my caliber. Maybe you can understand. A man of my caliber, you know, is a man of my caliber, of his caliber. At the end of the month, they say, Sylvester, come here. Ne? The principal's office. They go to the petty cash box. They say, Sylvester, here is your salary. Is it possible?
No.
It's not possible. So if it is possible, it means they're insulting me. Because in the petty cash, you can put how much? Yes, it depends on the business. 1,000, 2,000, 3,000, 100 rands, 40 rands in your case, your own business. So petty cash is only for small items. Things that we need now. Let's say we need milk. I know milk is very expensive these days. Like, yes, something that costs how much? 7 rand 50. Just imagine a man of your caliber issuing a check for 7 rand 50. You are showing off my brother in the wrong way. Don't do that. So for small items, we need to use what? Petty cash. I think you understand the word petty. What does it mean? Petty things. Eh? Things like that. So it means small things. So we buy envelopes. I don't know when last did I buy an envelope. How much is it? Because the last time I checked it was 50 cents.
Like a package of 4 items.
Okay. Stamp? I don't know when last.
They even sell stamps anymore.
Like, okay, I think it's maybe pre-stamped envelopes maybe these days. You know, but yeah, those small items. We need to pay out of what? What is that journal called? What I like about this in the exam when they ask you. Because sometimes, remember, you can confuse this one and the cash book payments. Because we are, in both cases, we pay. This one, they are very specific. They say paid out of petty cash. You know already. Can you see now? We just have to know how to record. So the others where they just say paid stationery, and they don't tell you that it's paid by petty cash or not. You can't just say petty cash because they didn't mention what? By petty cash. So this one is easier. What is the abbreviation for this guys? Come on, you must be good at the abbreviation. PCJ. Ah, sorry guys. I nearly said PE because I'm going to PE. Now, PCJ stands for petty cash. So here we can say outflow of cash by using petty cash. Yes, that's why I say they must be very specific there. Are we together? Now, tell me about the source document. I think you gave me the source document already, but just give it to me again. The source document for this petty cash. What do we issue? Guys, you need to remember petty cash voucher. You'll see sometimes in the exam they'll just write, when they give you a voucher number, they can say PCV. Can you see that? Or PC. Don't worry, we still have to learn more about them. Now I'm just giving the theory. Don't worry and say, okay, where are we going? No, we're going somewhere, okay? Now, is it original or duplicate? Try. Always? What did I say? Always? Original. There's no duplicate. Are we together? This is going to be attached. Let's say you are going to buy something out of petty cash. Obviously, the supplier of that, let's say you're going to buy milk. They must give you slip, ne? That slip is attached to what? Petty cash. Or the petty cash is attached to the slip. So when I record in the books of accounts, I'm going to have that slip from the canteen and the petty cash that I generated. That is for record purposes, okay? So we need to know that. Let's talk about VAT. Please think about it. Which VAT do you think must come here? Think about it. Whether we are buying or we're selling. That will give you, because we are buying. So the VAT is going to be input VAT. Thank you very much. I know it's boring, guys. Just tell me, what is the VAT? How can you classify it for me? Asset. Asset? Which one? I apologize, guys, for asking you, because I enjoy asking you questions. You know, yeah, but I'm just trying to show you that it doesn't change, even though it is under another book, okay? It's still input VAT. But don't worry, in the exam, when they give you those columns, you will see that they will give you input VAT. So you must have to know how to calculate that, but and how to open, because I still have to show you the general ledger account. Okay. This is number 3. Meaning number 1 was? Cash book receipts. 2. Cash book payments. 3. This is the journals where you are going to deal with what? Cash. But 2 of them are outflows and 1 is inflow. Which one is inflow? Cash book receipts. Which ones are outflows? Cash book payments and petty cash. This is the theory that I want us to learn. It's good to have a foundation. It's like building a house. Do you sleep in advance? What do you need? Foundation. Okay. And then we build the house, and thereafter we go and sleep. That's why there's this song called Solala Impede, you know? Because of that. In the house. Okay? Please, any question about this? So these are the cash transactions. Now I'm going to show you what? Credit transactions. Remember I said the main aim of the subsidiary journals is to group transactions according to their nature. Here I grouped everything that is paid out of what? Petty cash. Yes.
So is it possible to have an invoice on petty cash?
No, you can't, because invoice normally is a credit invoice, unless if they say cash invoice. It will go either in the CBR or CBP. But invoice on its own is what? Is credit in a way. So it will go to the other journals that I'm going to show you thereafter. Are we together?